Hi everyone, and welcome to this afternoon's session, and thank you for your patience. There was a bit of a discrepancy actually. My phone said gave me one time and the computer clock said another. So anyway, I just wanted to make sure that David was also recording this session, and he's given me, yep, looks like we are. So thank you, as I said, thank you very much for taking time out of your day to come and join us. And of course, we've changed the day yet again for the session that we have just before the start of the US Open. And there is a reason for that, and I'll explain a little of that in a couple of minutes. But before I do, may I just draw your attention to the disclaimer that is on your screen at the moment. As you know, trading can be a very risky business. Please don't ever use money that you cannot afford to lose. That's what I've got to say. In fact, while I sort of gather my thoughts together, let me just pass over to David, because it's very unfair. I sort of rattle on for minutes and minutes, and he doesn't get a chance to say hi to you. So I'm just going to pass over to him. Then we're going to come back to me, and then we will start. I promise you we will start looking at charts very, very quickly.
I can indeed. Thanks, darling, and a very warm welcome to you all, wherever you are in the world. It's early afternoon here, and US cash markets will be getting underway fairly soon. So we've already seen some nice moves on various markets already, which is nice to see. Because I don't think there's much news around today on the fundamental calendar at any rate. If this is your first time along, a very warm welcome. We run it as a two-hander, and Anna and I have been trading for almost 20-odd years. We started in a slightly curious way. In fact, we started in this world, the world of futures. That was our entry to trading and investing, if you like, where we were trading FTSE futures through the Liffey exchange, which sadly is no more, which we got used to and loved, and is now gone. So very sad. But this is where we started. We actually started trading index futures, which is not the normal route that most traders enter this particular world. We'll focus primarily in terms of platforms on NinjaTrader over on my side. Anna's got the MT5 platform up, which does embrace a lot of these markets. We say it every week, but it is true. MT5 is a true multi-asset platform. You're not trading the classical futures contract, if you will, but nevertheless you have access to all these markets. You've got indices there, quite a decent array of indices. You've got a decent spread of commodities. You've got soft commodities, you've got metals, you've got oil, energies, so on and so forth, and a decent selection of stocks as well, plus of course Forex. So it is a true multi-asset platform. So if you're on MT4 and you're looking at other markets, then certainly MT5 is a stepping stone into this world. And thereafter, perhaps moving to other platforms such as NinjaTrader, where you're then trading the true futures contract. The difference is, of course, you will actually need a futures broker alongside, and of course, the requisite data feed for all these markets. If you have any questions, please just drop them in the chat box. We're happy to answer them on air, or if they're longer questions, longer questions we'll answer on air. If they're shorter questions, we'll answer in the chat box for you. So we're happy to take those questions as we move through the session. I'll pass back to Anna, and we will get going.
Okay, these sessions, those of you who've been coming along sort of regularly, you know that we look at primarily the indices. We do a little bit of Forex, and then we perhaps look at a commodity, and we've looked at some stocks as well. But David and I have decided that really, because a lot of our attendees and people who watch the recordings of these webinars, they really classify themselves as a day trader. And if you classify yourself as a day trader, generally speaking, it is the indices, perhaps commodities, with a little bit of Forex as well. So the London session for Forex, where we focus on Forex, we are going to keep that to the London Open. And in fact, we're back tomorrow morning at our usual time. I think we're back at 7 o'clock. But if you do want to come along to these sessions in the afternoon, or afternoon, our time, the start of the US session, we're going to be a little bit more structured in terms of the markets that we're going to be looking at. And that is under the umbrella of day trading. we are going to sort of put more emphasis, if you like, on one of the capital markets. So today, the emphasis, if you like, is going to be on commodities, which is why I've got the gold chart. And you'll also notice I've had some break in my data. It's gone a little bit screwy, but I've got gold. This is the MT5 platform. With this particular broker, they offer gold, silver, there's oil, there's palladium as well, and I think they even offer natural gas. It's not the actual contract, but it's like a synthetic version of it, and sometimes it's also maybe a CFD. So we're going to look at commodities, and we're going to look at it from the perspective of trading intraday. And obviously we're going to be basing looking at the charts on volume price analysis, because that is our foundation, that is our basic fundamental methodology. And on top of that, we will be looking at the indicators from the quantum suite of which of those would be most suitable, if you like, for day trading. And on the MT5 platform, they're slightly different to what are available on NinjaTrader. In fact, we're going to move over to David's machine, because he's put together a workspace, a very typical workspace that he and I use. We use tick charts, we use time charts, and we use a renko charts, because as a day trader, what you're always trying to achieve, a day trader, let's take a short-term trader, that basically you're going to be in and out. You really don't care whether the market that you're looking at is going up or down. All you want to do is you want to profit and benefit from that move that you're seeing on your chart. So if you like a short-term a trader, and some traders trade very, very fast, very short tick charts. They're down in the seconds, as it were. NinjaTrader allows you to do that. On MT5, you don't have seconds. You certainly have a wider selection in terms of time frames on time base, as opposed to MT4. And what we do to have a non-time based chart to use with our time-based chart is we actually have this renko, and this is the gold. This is the chart for gold with the renko, and all it is purely price action, and you have it next to a time-based chart. And here I've actually got the 4-minute. I've got the 30-minute chart up here, which is for context, to see, because you always have to have multiple time frames. You also have to have a chart to, if you like, benchmark what. Oh, there we are. My data's caught up for whatever reason. You always, and this is where you do your analysis, if you like, of volume based on VPA. And VPA, as you can read in the books, if you've come along to this webinar, it's really premised on what it does for you is it will reveal to you whether what you're seeing in front of you, the price action that's developing, whether it's authentic or not. Is it a genuine price move, or is it an anomaly? And that is what it will do for you. So it will give you the confidence to place the trade, help you to stay in, and also highlight when to come out. And it is our indicators support the elements of VPA, of which support and resistance is one, candles and candle patterns, and obviously the relationship between the candle and the volume histogram that you see at the bottom. But also, we also have what we call our volume point of control, which is this yellow line here, and that is, this is the shading that you see at the back of the chart, and that is where volume, price, and time all combine to help us with, if you like, give some framework to the chart. It highlights important areas of congestion when we're likely to see a breakaway or a potential reversal as well. Now, because this is gold, what I also have here, I have it tucked away over here, is I have a chart of the dollar index, because obviously with commodities, it's very important that you have a view, certainly know what the dollar is doing at any given time. Now, the correlation between commodities and the dollar does break down, but generally speaking, when the dollar is falling, commodities will tend to be rising. Apologies about that. David's just had to take an important call, and vice versa. So if the dollar is becoming stronger, then you will find commodities will be falling. But this correlation does break down from time to time, but it's still very useful to have know what the dollar is doing. Now, if you don't have the dollar index, we have as part of the Forex suite of tools, we have developed what we call our currency strength indicator, and it allows us to track what the dollar is doing. This is this red line. You track it against all sorts of other currencies. But if you're trading oil, for example, then you want to know what the Canadian dollar is doing, which is this purple line here. As you can see, it's rising and the dollar is falling. This is on the 20-minute chart. So if I just move that to the 20-minute chart as well, and we'll see what's going on. And we can see here now, those are the indicators I said that we're going to be using. We're going to be using the non-time-based indicators, the renko and the tick over on David's screen, the support and resistance indicators, the VPOC, obviously the looking at the volume, and we'll be looking also at the trend dots and the trend monitor to help us highlight certainly entries and potential reversal points as well. And if we look at the 4-minute chart of gold, this is if we look at it from a price action and volume perspective, as we can see here, the interesting candle is this one. There was a surge higher for gold. It also triggered our volatility candle. Volatility is always it's associated obviously with momentum. In this case it was to the upside, but what tends to happen with volatility is often the next candle will then retreat within the spread of the candle, and that duly did, but it actually carried on higher. We had a little pause, then we had a lot of volume come into these candles, then we had another volatility candle triggered. Again, it retreated into the spread of the candle, but you see the candle here with this wick to the bottom. That's obviously the price was being supported. You can see the volume coming in, driving that price higher. Now, it then drove it right up to the R2. This is our Camarilla support and resistance indicator. And on this occasion, though, the volatility again retreated, but the wick is to the bottom of the top of the candle. That is telling us that there is weakness, and in fact this weakness looks as though it's carrying on through. And how that is reflected on the renko, it's very, very clear. You have our entry down in at the 192. This could be anything, by the way. The fact is we're looking at gold. This analysis of the chart based on volume price VPA principles and the indicators, it doesn't really matter. It could be gold, it could be a currency pair, it could be a stock, it could be an index. And what we're looking for, this strong move higher, is we're looking for the trend dots to change color. We're looking for the monitor to change color. We've got the pivots and the fractals signaling that we are reaching a point of perhaps of exhaustion on this particular move higher, and maybe we're looking at a potential to take a short. But we'll have to wait and see. And what is the criteria for the short? Well, we have to see, obviously, the down candles carrying on down, but we also have to see a increase in the volume. We've had a lot of buying come in this move higher, so this could simply be a temporary pause before the price carries on higher. But if you were long here, you were probably thinking, do you know what, I've had a good run up. I look at the renko, that is still blue. The trend dots are still blue, but we've had the first change into a grey, into this transition. Maybe this is a potential for a reversal. If you're not in it, then you could be looking for a setup to the short side. And what we can see here on our benchmark chart, which is the 20-minute, here we see the two candles. This is the weakness that came in with the wick to the top. This is the candle that's developing at the moment. And it's all really a question of what is your particular time horizon? How long are you looking to stay in this trade? Are you just looking to take a few pips and points and get out as quickly as possible? It really is down to you. Okay, we're actually going to be focusing more on the NinjaTrader platform simply because there are the futures contracts are there. So I'm going to pass over to David. If you've got any questions, please just drop them into the chat box either as we go along, and we'll either answer them as we go along, or we will wait until the end. So I will pass over to David.
Should be coming up any time now. I'm just looking over Anna's shoulder. Yep, that looks fine.
Did I miss anything of what I said?
No, that's great. I'm just staying with gold here because just to pick up on Anna from the MT5. One of the things you may notice if you are eagle-eyed, you'll see that the price quoted here is a little different from the MT5. I think the MT5 was quoting something like 11.97, 11.98. And on the NinjaTrader platform here, we're quoting at just over $1,200 an ounce. And that's purely because on this particular contract, we're on the December contract up here, this GC 1218. That simply means we're on the December 2018 contract, whereas the feed from the broker, they may well be using a different contract period to derive their synthetic pricing. And that's all it means. It doesn't mean anything else. It just purely means that the price action will be the same, but it just means the pricing will be quoted slightly differently on the MT5 platform, depending on which contract they're trading. And the closer that we get to the end of the year, then at some point that synthetic contract will be the same as the futures contract. So it will move to a December pricing model at some point, and the two will then be aligned, and then they'll diverge again as they move away. Because the futures contracts tend to get rolled over in various different cycles. Some of them for example, gold, we're on December at the moment. Oil, we're on October. And I've got a couple of softs. I've got soybean, we're on November, and wheat, we're on December as well. So it's all different. And the indices we're still in September. So it's just a different contract period. If I can just walk you through the charts I've got here and what I've got on the tabs as well, because presenting multiple time frames and multiple charts is quite difficult on one screen. So I've had to tab some of this so that it's not too cluttered. So if I walk you through what we've got, this is all gold. So we're still on gold here on the GC 1218. At the top left, we've got the quantum tick speedometer. And what the quantum tick speedometer does is several things. But essentially, it shows the tick speed setting if you're trading on a tick chart for that particular market and for that particular time frame. I've got this set to 3 minutes at the moment. And as you can see down here, what it's telling me is that if I want to trade a tick chart on that particular time horizon, in other words, the equivalent tick chart for that time frame, I can either choose the closest number to the Fibonacci. And there's nothing to do with Fibonacci. It just means that you don't have to change the settings so frequently. That's all. The actual, you can see here, is constantly changing all the time. It's flip-flopping at 726, 730, 731. It changes very quickly. And if you don't want to be changing that all the time, we're seeing a little bit of a pickup in tick activity. So you can either choose this number here or the actual. And what I tend to do is, if I'm trading these markets on purely in Globex, where the tick changes are less frequent, then I tend to use the actual. But when I'm trading in markets now, where we've got all the markets open, the cash markets and also Globex, then I tend to use this number over here. And you can see that it's just literally spiked up now. We're seeing a pickup in activity on the flow orders. The other aspect to this indicator is it really does highlight activity in its purest sense, not only in terms of the volume, because below here we have the volume profile. So what we're looking at here is a typical time chart, a 3-minute time chart, which is then converted to the optimal tick settings for your tick charts. What it also gives you the opportunity to view is the traditional volume price relationship also. So it is very much a blend. And as you can see here, just after 2 o'clock, one of the nice things about NinjaTrader is that it's easy to pick out precise times. This is 14:30. We're in the UK, so this is 2:30 our time here. This is when the US markets got underway in their time. But in your local time, it prints down here correctly, unlike MT4 and MT5, which can be a bit awkward when you're trying to identify at a precise time what happened during the trading day. Here it's very easy. This was the big spike in volume. A lot of volume coming into the market at this point, just after 2 o'clock, and the spread on the candles relatively weak. We had a deep wick to the upper side. So the anticipation, the expectation is that we are likely to see, at the very least, some weakness coming into the market. Why? Because we've got lots of volume coming into the market, but we aren't seeing that reflected in equivalent price action. And when you're comparing like with like, in other words, volume and price that's in the same session, then what you can use the volume and associated price action as your benchmark, if you will, which then gives you a metric as to what is high, medium, or low, or extreme, or very low, to then judge against the price action. And this is just an anomaly, because given that amount of volume, we should expect to see this sort of price action close with a nice widespread up candle. We haven't. We've seen a wick to the upper body, closing almost halfway down. So at the very least, when we see something like that, it doesn't mean that the market's going to roll over and there's going to be a wholesale reversal in this little trend run up here. It just means we've got some selling coming into the market, some pretty heavy selling coming into the market, because the market hasn't driven higher on high volume. So there must be a ton of selling in here, and we expect congestion to develop. The other thing about the tick speedometer is that it also gives you this traffic-like system of when the market is very active or when it's inactive, and when it's running at what you could consider the average, the norm, if you will. The norm is in orange. So when we're in orange, we're running at typical average tick activity, if you like. When we move to green, that's when we've got surges in activity. And when we're in these red areas, that means the market is lackluster. There's little activity. No one's interested. The market volumes are low. Trading activity is low. So this constantly changes throughout the session, as you would expect. And where you do want to be trading is certainly in the green areas, where you will see momentum reflected because you've got a surge in volume and a surge in activity, or in the orange section where you are dealing with a market that is moving along, probably relatively even paced, could be in congestion, but you're certainly not in one of these sluggish phases where you've got a red, for example, or over here where the volumes, as you can see here, are very, very low. And then we see the pickup, we see a transition back into orange. And as the activity picks up, we go into orange and flip-flop between orange and green, which is really what we want to see as an intraday trader. So that's the tick speedometer. Now, over on the right-hand side here, I've got the renko on this tab here, but I've also got hidden behind it, I've actually got the equivalent tick chart here. This is currently at 644, which is what it was before. But so let's just change that over to 610. Just change that back a bit. There we go. Not a huge difference. And as you can see, we've got the quantum trading indicators. As you saw on the MT5, we've got the trend monitor, and we've got the accumulation distribution, which gives us a sense of support and resistance on the tick chart. I've also got the renko here running alongside, and I've got this set at the moment to 1 minute. I'll just double check and see if that's changed at all. This is the renko optimizer, and you can run this at any speed you like. So if you want to run it on a 1 minute or a 2 minute, or you want to drop down to a 30-second or a 15-second, it works, and it'll deliver the optimal brick size for that market at that particular point based off that time frame, because it's working off average true range. So you're always trading with the market, the optimal setting for gold at this point of the trading session. And as you can see here, it says a 4 brick renko. So if we just click on that, that will then deliver us the optimal renko chart for gold based off a 1 minute time horizon. And what that is doing in terms of brick size over here when it says a renko 4 or 4 renko, what it means is, and this is why it's so clever, is because it takes the market that you're trading and it converts that to the appropriate setting for the market. So here, the 4 represents 4 cents because we're trading dollars and cents here in terms of gold. So here we're trading every move of a brick, which is 4 cents for gold. Down at the bottom here, I've got some conventional time-based charts. I've got a 5-minute chart here on the left, and I've got a 15-minute chart here on the right. And finally, and perhaps most importantly of all when we're trading commodities, I've also got the dollar index here as well. And this was the move which generated that very strong move. This is the dollar here. I've got this on 5-minute. We're starting to see a slight reversal in strength, although we've run into this moving average as a potential area of resistance. But again, this was quite an extended phase of congestion throughout the morning. There wasn't a lot going on. The dollar was flip-flopping around. And from a classical breakaway move, this was just perfect. It's just as you expect to see. You've got to be patient if you're a breakaway trader. It doesn't matter you're a breakaway trader in this market or indices or whatever it may be. You have to be patient. But exactly the same applies to the indices. When you get these congestion phases, you've got a very simple area of resistance building up here. You've got a very simple area of a support building below. And once those are breached and you've got a decent close away from it, then you're looking for a move away from that region. It doesn't always happen, and often the market retests these regions. But the key point is that once you've got one in place, certainly from a trading perspective, it gives you more comfort in terms of the market re-penetrating into those regions. And in addition to that, it also gives you great places to place your stops. So if you're looking at these congestion areas, then putting a stop loss up here if you're trading short, it's a fantastic barrier you're putting in place of this price congestion. That's extra protection for your stop loss in the event of a reversal against. So that's back to our 5-minute chart, and we're over here, we're on the 15-minute chart in the same way. Using the combination of renko, time, and tick charts, you don't have to use them all, but they all deliver different things as an intraday trader. The renko charts is a great chart to smooth out the noise of the market. The indicators work in exactly the same way. You saw it on the screen, got exactly the same here. We had the reversal from the bearish on the trend dots. They transition first, they go through into the blue as the trend starts to build, and the trend monitor then follows thereafter. Interestingly, there was no transitional color here. We just went straight from the bearish, beg your pardon, straight through into the bullish price action. And it just smooths this trend out all the way. Now, if you look down on the 5-minute over here for a time-based chart, what is that delivering? Well, it's delivering similar sort of information. Obviously, we're looking at the volume associated with the price action, but we're also picking up all the other signals, such as the volatility indicator here, for example. On this one, we continued higher, but on this one, we've got what we expect to see, which is congestion into a phase of sideways price action. We've got a ton of volume coming in under it. Big wick to the upside, volatility is candled, and the volatility indicator is triggered the instant that price action moves outside the average true range. So you don't have to wait for the candle to close. And when you see that volatility triggered, it's a heads up warning to expect at the very least some congestion to follow. Not always, but often that is the case. And potentially a reversal. Again, not always. It's just indicative of volatility, and volatility generally means participation in the market, particularly with the big operators in terms of the futures market. So you expect to see decent volume associated with it. If there isn't, then it's more likely to be a trap move, but generally you do see decent volume associated with these kind of moves. And what we're seeing right now is very classic in terms of the follow-on price action, which is a consolidation phase to follow. In addition to that, and very much the same way on the Renko chart and also on this, the 5-minute time-based chart, we've now got the pivots developing. We've got a pivot high. We've got a pivot low. They are just simple indicators which help to define where the floor and the ceiling is building right now in terms of the price action. We are developing a congestion phase. The pivots are telling us that. And the same is true up on the Renko. Exactly the same principles apply. In terms of the Renko, it's just a neater depiction, if you will, because we're dealing with bricks. We are dealing with things which are all the same size. We don't have tails to worry about there. So you get a very neat arrangement of support and resistance, but the same principles apply. We've got a pivot high, pivot low, pivot high, pivot. None of these pivots are moving higher. So we haven't got a pivot high, pivot low, and then another pivot high, which is way off the screen up there somewhere. It's pretty much at the same level. This one's pretty much at the same level. So what we're doing here is we're building congestion. You can see it developing. We're flip-flopping around here on the trend dots. The trend monitor has also started this transitional color. We've gone from what was the very bright blue of the bullish trend. We're now starting to move into the darker blue of a potential pause point. It doesn't mean that we're going to see a full-blown reversal, but again, it's another signal that we're seeing on the Renko. And we haven't actually seen that over on the 5-minute time horizon, and certainly haven't seen it over here on the 15-minute time horizon. If we move out to the 15-minute time chart down here, what have we got? We've just got this rally. We've got three candles with rising volume, which is a strong bullish signal. On this time frame, what have we got? Let's just pop that open full size. We've moved through this very strong area of what was potential resistance at this point as we were moving up through it, and now is developing into a strong platform of potential support. And above that, we've got some minor resistance ahead at 12.04, so we've got a couple of dollars here of potentially clear water if the volume supports a further move higher. But there's no change in the trend monitor on that, and you wouldn't expect it because it's too fast a time frame. If we're over on the 5, we haven't seen a change here either as of yet. And this is what it's all about. It is about using multiple time frames or multiple charts, to be more precise, and to blend them together, whether you use tick charts with Renko and time charts, or whether you use Renko and time only, or perhaps only tick and time-based charts. That's a personal choice, but all of them give you something different to a different aspect of the price action to help you in your trading analysis. Same principles applying here. This is on the 610 tick chart. We're running along here. You can see here on the Tickspeedometer that we've really dropped down to a very sluggish level of activity. The tick activity is draining away. We've gone to red. Everything's a little bit sluggish. We're in congestion. We're on the tick chart here. We've got exactly the same thing. We've got pivot low, pivot high, pivot low on the little yellow pivots, which are helping to define those areas of support and resistance, and the accumulation distribution indicator itself, which delivers these various levels based on price, also highlights those up and down the charts where they've been cleared and so on and so forth. And as you can see here, we are flip-flopping around on the trend monitor. We've had the bullish run. We've gone into darker blue. We've actually gone into darker red, but we never made it through to full-blown red. Now we're going back into darker blue again because we had this little bit of a pickup here. We're now flip-flopping in congestion, and we just have to be patient and wait for the next move. Just drop that out of the way again. And back down to the dollar, let's just see what's going on in terms of the dollar. It's not always the case that the direct correlation, or the perceived direct inverse correlation rather, between the dollar and commodities. It does apply sometimes. It can be quite strong, but bear in mind it also does fall out from time to time, and it doesn't apply universally across the various commodity markets. In fact, let's just flick that back. These are all linked together. So if I change this over, let's just go over to, let's see what's happening on oil, for example, which is the October. So I'll just change this to October. Just wait for that to load. There we go. We're starting to see that reflected in the oil market. And let's just see what, let's just set the renko to, let's just change that to a minute, just see what the setting is for that one. That's just calculating it. And what it's saying right now is we need to open a 5-brick renko chart for oil if we're trading oil intraday. There we go. And we're now on 5 cents on the barrel for oil. Just looking at the across the charts, got a decent pickup in activity here. Nice volume associated with this candle here on the 3-minute time horizon, breaking away from this congestion phase as the physical markets get underway. Moving higher on the next one. Nice confirmation there, signal, decent activity under that volume. Little bit of red coming in here, a little bit of inactivity. If we drop down onto the time horizon, the 5-minute time-based chart, we see at 2:30, this is 2:30, this is when the market's opened. What do we see? We saw a spike in a nice jump in volume, in price action. Went from 68 to 12 odd up to 35, so 20 odd cents on the barrel. But also associated with the volatility indicator, which gives us, as I've said before, it just gives us heads up that potentially we are expecting the market potentially to reverse into a congestion phase before continuing. And if you're on a renko chart or you're on a tick chart, that is the sort of information that you want to see, because all these pieces of the jigsaw puzzle which help to give you the confidence to trade these markets as an intraday speculative trader. You don't really care which way the market's going. You don't care whether it's going up. You don't care whether it's going down. You don't indeed care about the market per se. You just want to be on the right side to take out whatever you can in that particular market and maybe move on to something else. You may specialize as an oil trader. A lot of our customers specialize in particular markets. They may be gold traders, they may be oil traders, they may be soft commodity traders. Doesn't matter. The same principles apply. Or you may be a jack of all trades and you may be indiscriminate. You might just go around looking for markets to trade and just take the opportunities as they come. The other way of dealing with this is to take a particular tactic to market and look for a tactical approach and have no view on which market you apply that to. So, for example, as I said earlier on, if you wanted to approach this market as a breakout trader, that is your tactical approach. That is what you like doing. You like seeing congestion phases, and then as the congestion phase breaks down, and there's plenty of them, and it's ironic in a way that congestion phases constitute something like 70 to 75% of the price action, if not a little higher. So if you're looking for them, there's plenty to find, and all that's required is patience. So you are taking a single tactic to market. So if breakout trading is your strategy or your tactical approach, then you can look at that across metals, energy, soft commodities, indices, stocks, whatever it doesn't matter. It makes absolutely no difference at all, because you are taking that tactic, and what you're looking for is the correct price action for that to then be applied. And it's very similar in the way that Anna and I traded many years ago, trading covered calls on the US markets. We were very heavily involved in cover call writing. And what you're looking for is, it's a very specific tactic to make money. And all you're looking for is a particular sort of chart, stock chart, where the price action is in congestion with a mildly bullish tone. And once you've found those in your chosen time horizon, we were looking obviously at the daily because we were holding options, we were covering the option with the underlying stock. that is a very, I was going to say a one-dimensional, it's a very targeted, focused approach, because you know exactly what you're doing, you know exactly what you're looking for, you're not indiscriminate, you don't care about anything else that's shooting up or shooting down, you're just looking for those specific opportunities in the thousands of stocks that are available, and you're just picking them off one by one, and you're earning revenue on the options as it comes in. It's just a classical way of trading, of defining what it is you are, what you're trying to do, and just going out and hunting those opportunities down. You are very much like a hunter-stalker. You're not interested in all the other game that's out there. You just want to go after one particular thing and find it and target that particular aspect of the market. Just seeing what's going on in terms of oil right now. And of course, with oil, you've got, with any of these markets, you've got all the fundamental drivers to consider as well. It's not just about the charts and the price action. You've got to consider the fundamentals, particularly with oil. You've got obviously the weekly oil inventories. You've got the politics of OPEC. You've got all of that to consider. You've got trade embargoes and everything else to worry about, and so on and so forth.
Sorry, do you want to just hop back? Calm down a bit. Just hop back to gold.
Yeah, I'll just go. Do you want me to transfer? Do you want to pass?
No, just go over to.
Okay, let's just go back to gold.
All right, you want to bring it over to here?
I don't mind. You'll transfer back to you?
Yeah, and then I'll come back to you.
Okay, I'm just going to transfer back to Anna and go back to gold on the MT5. So we're just going to switch screens. Bear us a minute.
I've asked David to just pull up his gold workspace, because there seems to be some activity that's coming up in the in this one. I've just got the this is the dollar index. Let me just move that to 20-minute. Let's have a look. To 12. Fine. And we can see here the with the dollar trying to move higher, but I just want to have a look at the saying on the 20-minute chart here, and also on the 30. And what we can see here, when I said earlier, you look at the volume price analysis on the time-based chart, and and to highlight what David was saying as well is, do you like to trade? When you're analyzing your charts, do you perhaps like to look at a particular tactic? You develop a set of a decision-making matrix, if you like, and perhaps one of them might be based on candle patterns. So here we have a very nice typical candle pattern. There we have a bullish engulfing candle. You see the fall in the price. It's stopped dead on 1191. The S&R indicator is highlighting that, and then the next candle is a reasonably strong up candle, but it is completely engulfing that candle that we see here. And I don't have a 40-minute chart, so let's see what that looks like on a 30-minute. Let's have a look up here. What we have is, here we have it. We have a sort of hammer candle. So that's where you start. You start with your chart analysis. So you look at maybe a candle pattern, and you say, I like to look, and that's all you focus on. You maybe look at two-bar reversals. You look at engulfing candles, and that is the first point, if you like, the first step in what I call, maybe like to call your decision matrix. We have it here on the 10-minute, not quite so clear cut, because we did have a little bit of weakness come in, and then the price sort of moves up, and we kind of have volume rising as well. But it's the first, if you like, inkling that something is going to happen. What your renko will do, it will actually pick that up. It will take away all the noise. It will take away the the spikes, if you like, and then you perhaps look at the renko and you look at the bricks. We have, the reason we developed these trend dots is because they are very, very close to the closest of all indicators lag, but this is the least lagging one that we have. We've tried to make it really, really close to the price action, and you think, okay, this is when we had that, looking at that potential setup, that reversal, a 2-bar reversal, a hammer, you know, whatever combination that you like to pick up. So as soon as it starts to change color, then the trend monitor kicks in, and then away you go. Now, when we looked at it earlier, we were looking at it for a reversal, perhaps to, it had the move reached a point of exhaustion. If I go back to, let's have a look on the, it's sometimes difficult on the faster time frame. So if you see here, this is the 4-minute chart. You have an awful lot of candles all between here, and you think, well, you know, it's when you've got 2 candles, one to overlay on another, it's very easy to see an engulfing candle or a 2-bar reversal. But when you've actually got lots of candles to put together, it's quite hard to decide, well, you know, if they were all overlaying on top of each other, what am I actually looking at? Which is why you have to look at, maybe let's move that to a 30. There we are. There we are. There we are. That's all those candles in this in this bar that's being formed at the moment. So when we were looking at it earlier, we were looking at the pause point. Let me go back to 4 minutes. Let's have a look. Here we are. Because I want to compare it with the renko. And we had this, which looked like to be a potential reversal. And I said, if you remember, when I was looking at the 4-minute chart, I'm going to pull that up again. And I said, well, we had this nice volume coming in to push the price higher, which you would expect, because it was also when the market was opening, the physical market was opening. Up until then, we were looking at Globex. And then we've had this this consolidation, if you like, this move sideways, because we also had the volatility candle. And I said, well, if that was going to be a true reversal, well, you know, you're going to have to see some selling coming in, going right back to what we said about VPA, where the relationship between the price action and the volume has to be congruent, and they have to agree. You know, otherwise, if you have an anomaly, it ain't going to happen. So at the moment, we look as though it wants to push higher. Again, the volume is relative. I think we have to allow a certain leeway, because this is very specific to the open of the market and this rush higher, as it were. So, but these volume bars still have to be in agreement with the price action that we're seeing at the moment. And then we look at, going back to the renko, we look at the support and resistance. What's interesting is, I think on David's, I think it was about to change. It did actually change. It looks as though maybe it was going to go, didn't go to bright red, it went to the in-between color. But this has actually stayed relentlessly blue. So it's kind of also telling you, well, do you know what? This is just a pause point. Now, if you're a breakaway trader away from congestion phases, well, you're having a congestion phase now. Now we're looking to see what are the levels. Do you go in with a market order, or do you go in perhaps with a limit order? The levels are very clearly marked on your chart, whether it's it could be a moving average, it could be one of the quantum indicators, it could be the Camarilla, whatever it is you choose to use to give some geometry, some framework to the price action that you see. I just wanted to highlight that, because, as I said, we had this pullback here in the renko. The pivot was actually triggered, so we had our range, if you like, our congestion. It's trying to break out of congestion. Let's see what the dollar index is. Let's see what the dollar's doing here on the CSI. This was it's tried to rally. Let's move it down. And with indicators, and whatever indicator you use, whether it's proprietary or standard, go to a faster time frame. Go to a faster time frame that you're actually on, because that's where you will see the moves. And we can see here, it seems to have run out of steam. This is on the 5 minutes. It's kind of going sideways. So it's at an interesting juncture, and it's at an interesting juncture because we can see that it is still in this congestion. It's trying to move higher. You can see that the dollar is trying to move lower. That's what we want to see if the correlation is working quickly. The initial move higher, precipitated by the candle patterns that we looked at, the volume that came in, it's still very much in play, you know. But as a day trader, as a short-term trader, I suspect the vast majority of traders would have been out a long time ago. They've taken a few points and got out, and there's absolutely nothing wrong with that. Can I move back to you, love?
Yeah. Just while Anna was talking, I've actually moved across to another market. I've got this running on the ES, which is the most heavily traded index of all. It is extremely popular with speculative day traders. And we're on the September contract here. And this is the futures contract for the S&P 500, massively traded contract. You can see what I've got up here. This says 4,181 ticks. This is the tick chart for the index. And actually over here it's slowed down quite a bit in the last couple of minutes or so, but it gives you an idea of the huge variation in tick activity from, for example, on gold, where on this sort of time frame you'll be talking about a few hundred ticks, whereas you move to something like the ES where you're talking several thousand ticks on these sorts of time frames. We slowed down here, so I'm just going to change that back to 1597 so that we're aligned over there. That's on the tick. You can see it's pretty bearish at the moment, certainly from a speculative trader's perspective at any rate. What I've also done on the renko, I've actually chosen, I've gone for a 30-second time frame rather, and that's delivering up a brick size of 3. And what that 3 refers to in terms of the ES, because we're dealing with an index point, which then breaks down into 4 ticks per index point. What the 3 refers to there is 3/4 of an index point. In other words, 3 ticks of 4. So what the brick size here is delivering is 0.75 of an index point. Other than that, the principles, exactly the same principles apply over here. You can see we've had a lot of activity. We've had a lot of volatility. This is the open down here on the time-based chart. This is classically what we expect to see. Invariably, as the cash markets get underway alongside Globex, we get these volatility spikes, bang, 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 one after the other. Then gradually the market starts to settle. If you're going to trade these markets, you have to wait for these periods of volatility. The open is generally associated with volatility. You'll see markets spike higher and then reverse sharply lower. And it's just a question of being patient. And going back to my earlier comment about taking a tactic to market, if your tactical approach is breakaway trading, fine. You wait for these moments to pass. You look for the various levels. Over here, for example, on the 15-minute, you've got a pretty strong area of support here, which was holding. We saw the first candle come in on 15-minute, big up thrust, ton of volume, big wick to the upper body. Sorry, I beg pardon, the first candle, this was the second candle. Now we're starting to see, you can see here, this candle hasn't closed, but nevertheless, we've got the volatility triggered already because we're way outside the average true range. So we've got some pretty widespread price action going on here. Up on the renko, we've got a decent trend developing. And bear in mind that most speculative traders in this market are really only looking to take 1 point. 2 points is good. So for the ES, you know, a brick and a bit is a good result. So, you know, if you're taking anything other than that, if you're taking on this 3 renko, this 3 brick example, where you're taking 3/4 of a point, a couple of bricks of price action here is pretty good. If you're taking anything more than that, it's brilliant. Here you can see the market developing nicely. We've got the trend dots helping to keep us in. We've got the trend monitor here, which is bright red on us. That's good. We've got down on the 5-minute, same sort of thing. We flip-flopped into darker red, but we're back into brighter red here. We're trading down at 28.79 spot 50. Over here, what have we got? We've got a nice bit of price action there, decent volume underneath it, so that's confirming. We're in orange, so we're ticking along. You know, the market's moving nicely. You can see over here on the tick charts, we've ramped up again. The actual is 5,500. So if we go over onto the tick, we're running way too slow here. So let's just up that to 4181. This is the huge variation you get on tick charts with this particular market, and how dramatically it varies from all the others. So if you're a day trader, a speculative trader, whether you're trading commodities, indices, stocks, whatever it is, it doesn't matter. How do you know what tick speed to set it to? You don't. You have to guess. With this, you don't. It tells you automatically, this is the optimal tick speed right now for this market. There's no guesswork. It just delivers it automatically for you, and you just set it accordingly. The only decision you have to make is how many tick charts do you want to run, and do you want to run on the actual, or do you want to run on the closest to the actual? That's all you have to do. If I go back to the renko, let's just see how that's panning out. Very nice. Nothing scary at the moment. Tickety boo, we're dropping down. You know, we've logged another point in the bag. Fantastic, great stuff. Nothing terribly stressful about it at the moment. And it's just using this constant blend of volume price analysis, time-based charts, and then non-time-based charts, and combining those all together to help you make those all-important trading decisions. And it's not just about when to get in, it's about helping you to stay in, as indeed that the trend monitor is one of the key indicators. And then, of course, you know, the when to get out, and it's all about using the signals that are there, whether it's on the time-based chart, which tells you something, whether it's on the renko that tells you something, or whether it's on the tick chart, or whether it's in a different time frame, or whether it's up on the tick speedometer in terms of a slowdown in tick activity. Yep, just going to pass back to Anna at that point.
And actually, while David was speaking, the gold chart has been behaving itself very nicely. Thank you very much. Our CSI, our currency strength indicator, what I'm really interested in is this red line, which is the dollar. I do have the dollar index as well, but this is just the dollar against all these other currencies. And as I said earlier, put it on a faster chart. This is on 5. It is falling nicely, so it is falling. There is the correlation is working. The renko, it's now trying to break out of the congestion. If I just do that down, there we are. And the next question is, well, where do we think that is going? And the support and resistance, the lines haven't been painted over here yet, but we just have to eyeball it. We don't spend enough time looking over to the left-hand side of the chart, and here we have 119. It's actually the iconic 1200. Is it going to get to 1200? Well, we will wait and see. But this is what we look, and we also with the renko on the meta quotes, it does actually occasionally produce spikes, and what that is telling us is that there is a degree of momentum coming in, there's volatility coming in. So that's another sort of little clue that we have. And I've actually got the 2-hour chart here on gold, and if we look back, we have this ton of volume coming in. We've got a nice big spike to the bottom of that candle, and we've got you've got the candle now building with volume beneath it. But we want to see if that's going to move higher. We really do need to see that also increase. That's quite a wide candle with a lot of volume, and we need to see the same thing on this one. But the renko is keeping us in. The time chart on the 4, this was this congestion period that we've had here. The Camarilla also, if I just shrink that down, that's where it's heading. It's heading at 1198. Will it pause there? Quite possibly. The next major stop is here, which is around the 1200. And again, more likely, if it's going to get there, it is more likely to pause once again. the rule is the protocol, the Camarilla protocol says basically when it reaches the R4, if you have to have a close above, not just a touch, it actually has to close above, and that is often taken as another sort of a breakaway, breakout trade, but it hasn't quite got to R3 at the moment. So let's just take that back again. Close that down, and again the renko is picking up this momentum, the dollar is falling, and as I said, we just simply wait. An awful lot of trading is simply waiting and being patient. It's something that as traders we're not actually very good at, and we can see here on the renko, as I said, that spike to the top is encouraging in if it's going up. If the spike was at the bottom, that's what we don't want to see. We don't want to see that, because that's usually the price will be looking to reverse. I just expand that up a little bit, you can see it a little bit better. There we are here. So, and the trend dots have gone back to blue. They were blue in the congestion period. We do have this intermediate color, this gray. We have the pivots also defining the area of congestion. Have gone back to blue. This has remained blue. We know what the levels are. We know what it's aiming. Where is it trying to get to? It will pause. What will push it through? Obviously, we look at our candles, patterns, and all the other indicators. But the one thing we do need to see participation, and that is volume. Anything else you want to say on that, Danny? Sam, yes, you can, as I said, the information that comes to us as traders, it all depends on your time horizon. A lot of traders will be looking at a strong uptrend and waiting for that trend to, that strong move higher to end, so they can take a reversal trade. I don't know. Maybe you have more of a fundamental approach to it. You think it's overvalued. All traders, we all have different opinions, and you can take two traders and you'll show them exactly the same set of charts, and then you give them exactly the same set of information, and one trader will take a view that they're going to go long and another trader will go short, and it doesn't mean that one is right and one is wrong. So please don't, whatever it is that you've got, however you've come to that conclusion, that is your conclusion. If it's supported by the price action, the volume, whatever indicators that you're using, then fine, go for it. Anything else? Any other question? Can you see, David, or is that it?
I think that's it.
Fine. Lovely. Right, very, very quickly. I haven't really had time to, I was going to, that's moving up there. That's for those of you who haven't come along to all of them, this is maybe your first time. We did start off this series by looking at the price cycle and volume price analysis and C states. It's all part and parcel of stuff that's in my books, and it's also part of our education program. Really, it's to save repeating the same thing over and over again. This was one of the original slides. You can just catch up on the recordings, which you'll find on YouTube, either at my YouTube channel or at the Quantum Trading YouTube channel. And it's about the first 5 or 10 minutes, and it just it just has a little sort of knowledge base, if you like, on those based on as I said, the price cycle, C states, and volume price analysis. QuantumTrading.com is where we are indicators, and we're actually working on the indicators for Trading View and also Trade Station. You can buy one, you can buy a discounted bundle, or you can buy the complete package. It's a lifetime license. There's all free upgrades. In fact, someone, I think David, was asking about the indices that we've produced for the MetaQuotes platform. We're looking to improve on those, and we're working on a couple of other ones as well. And if you buy the full package, it's automatically added to the package. You never pay us any more. 24/7 support, 365 days of it, and you can transfer from platform to platform. Although the NinjaTrader is slightly more expensive because there are more indicators, the tick speed, for example. But the prices that you see there, MT4, MT5, that's it for the package. But on Ninja 1197, that does include all the Forex indicators. And in fact, if you're a day trader and really Forex is not your thing, either for futures or in the spot market, we have something called the Essentials package. It's really a day trading package, which is all the indicators that David was using. And that is only 749, and that's also available on EPP. So it's really everything, but not the indicators specifically for the Forex market. This is where we are at the moment. It's actually from our education website. This is the program we have at the moment, and I have to say it is Forex, pretty much Forex specific. There are 5 modules. It does include all the indicators, and it's technical analysis, fundamental, relational analysis, psychology, what you need to know to trade. It's about 50 hours of video and video podcasts and free downloads and the downloads as well. And it's quantum trading education, or you can email me, anna@annacooling.com. And actually, there's help desk, but you can email david@quantumtrading.com if you have any further questions or you'd like to know a little bit more about the indicators that we've used here. I think it all remains for me to say thank you very much for coming along. I'll be keeping an eye on the gold chart. Let's have a look what's happening. Yep, there it is. Partly because I think, as I said, with the dollar falling, that's what you want to see. You want to see this, you know, this traditional correlation maintain. What did I say? I said it was probably going to stop at the pause at the R3. Well, it certainly paused there. It's actually come away from there. Where's it going to go down to? The R2. What the renko does, it just helps to keep you in. So there we are. We are back tomorrow morning at 7 o'clock London time. I know that's a little bit too early for the majority of our US traders. So if you're not coming along tomorrow, we will be back this time next week. So have a great trading day, have a great trading week, and we'll catch you next time. Take care. Bye.